Accounting Information System (AIS) Definition and Benefits. Have you ever wondered how businesses keep track of thousands of transactions without getting lost in paperwork? The answer is something called an Accounting Information System or AIS. An accounting information system is the organized combination of software, data, people, and procedures used to collect, store, process, and report a company's financial information. In simple terms, it's the financial control center of a business. Okay. Think of it as the system that captures every money movement and turns it into usable information. Let's break that down. Whenever a business makes a sale, pays a bill, buys a stock, runs payroll, or receives money, that information needs to be recorded somewhere. An AIS is the system that generates all of that automatically or manually and keeps it organized. A modern AIS usually include accounting software, databases, internal controls, employees who enter or review data, and reporting tools. So instead of having scattered receipts and random spreadsheets, everything is pulled into one connected financial system. Now, why is this so important? Because businesses don't just need records, they need accurate, timely information to make decisions. And AIS helps generate financial statements, track cash flow, monitor expenses, manage taxes, and identify problems quickly. For example, if a business suddenly notices rising costs or unpaid invoices, the AIS can highlight that before it becomes a bigger issue. That means it's not just recording history, it's helping guide decisions. Let's take a look at the main benefits. First, accuracy. A proper AIS reduces manual mistakes and keeps records consistent. Second, speed. Reports that used to take days can often be generated in minutes. Third, control. Managers can control what's happening financially in real time. And fourth, compliance. It helps businesses maintain records needed for taxes, audits, and legal reporting. Now, a common misunderstanding is thinking an AIS is just accounting software. It is not. The software is part of it, but the full system is also includes the people, procedure, and internal checks that make sure that the information is reliable. Another misconception is that only big corporations need one. In reality, even small businesses benefit massively from having an organized financial information system. So, what's the key takeaway? An accounting information system is the complete setup businesses use to collect, process, and report financial data. It improves accuracy, speeds up reporting, and gives businesses the financial clarity they need to operate properly. And once you understand AIS, you realize businesses don't just survive on numbers alone, they survive on organized financial information. Thanks.